Welcome back, ladies and gentlemen, to Liquid Meta's channel on the forefront of the infrastructure powering decentralized finance. Joining us is John, the Chief Executive Officer. Welcome back, sir.
Thank you very much. Pleasure to be back.
Yeah, always a pleasure to have you back. So last time we spoke, we really kind of dove down into your history leading up to Liquid Meta, but today I kind of want to more or less focus on the company itself. And first, for newer investors, I mean, you guys claim that you want to bridge to traditional finance with the decentralized finance. So can you kind of just offer the elevator pitch kind of behind Liquid Meta, just for those newer retail audiences that might be tuning into this?
Yeah, so Liquid Meta is a technology company operating in this new and emerging world of decentralized finance, better known as DeFi. And what Liquid Meta does today is it uses its own capital, its own balance sheet to deploy across the DeFi spectrum, mostly across exchanges. And what we're doing is we're providing liquidity to areas of decentralized finance, liquidity pools, and in return, we're receiving a fee, a revenue, a cash flow. And we're doing that in a very consistent, steady, and stable manner.
Okay, so I remember last time we spoke as well, you guys said this was kind of your aha moment leading up to Liquid Meta, was that, utilizing what you just talked about, you guys are able to basically avoid the volatility in, say, some of the altcoins or the crypto market itself, just kind of being in this loaning sector. Can you kind of just expand a little bit farther on that and exactly kind of that operation there?
Right. So as we all know, that the crypto markets, they are a very volatile market. At least historically, they have been. Deploying capital into cryptocurrencies and DeFi early on created a tremendous amount of volatility in most investors' portfolios. What Liquid Meta is doing is we're building tools and we're building technology that will allow the investor to provide some capital, deploy its capital across decentralized finance while reducing a lot of that volatility. And we do that in a number of ways. Number one, we try to diversify the capital across a number of different protocols, across a number of different networks, blockchains. So that's number one. Number two, we try to reduce volatility with the use of stable coins. Stable coins are typically pegged to very stable financial assets vis-a-vis the US dollar for the most part. And thirdly, we try to really reduce volatility and risk through a very comprehensive hedging program. So really trying to provide investors access to DeFi, to decentralized finance, the fastest growing emerging sector of crypto, and doing it in a low vol manner. And that is really that was the aha moment that I was referring to on our last call. So again, it's providing access to a very volatile industry, an emerging technology, and doing so in a very rational, logical, and low volatile means.
Yeah, that's a pretty incredible statement coming from the crypto sector of the market. But
Yeah.
as we lead into, say, 2022 here, talking about the scaling of this business, obviously being a little bit more probably capital focused and kind of, bleeding that in there. So how do you kind of scale into that then? Are you guys looking to raise capital in the public markets and then take that and constantly redirect it into the business? How do you guys go about that into 2022?
So that's a great question regarding scale. We did a private round of financing about 6 months back. We've been liquidity mining with that capital since, generating very good and stable, healthy returns on that capital. And then more recently, we just closed an RTO financing, a subscription receipt financing. We raised roughly 22 million US dollars. And so that's part of the scaling process heading into 2022. So using our balance sheet, which will now range between 22 and $25 million, all US dollars, and using that capital again to provide investors with access to DeFi in a low volatile manner. Now, as we head into 2022, part of the use of those proceeds is to continue to develop and build out our technology stack, which at some point in the near future, near to medium future, we'll be able to offer those technologies and those capabilities to outside users, to enterprises, potentially institutional investors that are looking to take advantage or exploit the growing and emerging sector of DeFi using Liquid Meta's technologies and capabilities. So that's part of the scaling process. In regards to your question about raising incremental capital, that's right now we're really focused on the capital that we just raised. returning value to our shareholders, and again, providing access to DeFi in this very low vol manner in which I described to you earlier.
Yeah, that's absolutely incredible to see where you guys are currently sitting. Do you mind talking a little bit about, just to finish up here, perhaps some of the risks behind this? Because I know there's a lot of, obviously, talk about regulation. Obviously, you know, especially when you get into the side of it with staking, where people are more considering it almost a security, and kind of how could that affect your business, kind of moving down the road, depending on how you know, regulation comes down on this.
So there's two real risks to the business. These are the things that could potentially keep a CEO up at night. Number one, you highlighted on that right before in your previous comment, and that's regulatory risk. So right now, we do know that there is not a great deal of regulatory framework as it pertains to DeFi or stable coins for that matter, or really the crypto markets at large. We anticipate that over the coming years, that there will be a framework put into place by the various powers that be, whether it's the SEC down in the United States, or the Ontario Securities Commissions and the other regulatory bodies up in Canada. We do believe that there will be a regulatory framework. So what Liquid Meta would like to do, given that it is a public company, transparency and visibility is really part of our business model. We would like to work with the regulations that we're seeing coming down the pipe. We want to be as transparent, as open as possible, and really live and operate within the confines of those regulations. So they're coming. We are anticipating that they are coming. And again, we just want to be as open and participate as cleanly and as clearly as possible. So that's the regulatory framework. I can't really speak to how the regulatory bodies are going to regulate this industry. It's just such a new and nascent environment. We can't predict which direction. All we can predict is that it is coming. The second area of the business that is a risk factor is security. So as we all know, there are the options of theft and hack and bank runs on the various protocols within decentralized finance. The way that we reduce risk in our balance sheet is a couple of ways. Number one, we're very diversified. The business spreads its capital across 7 different networks or blockchains. Right now, we're deployed across 15 different dApps or decentralized exchanges and 20 different liquidity pools. So we will not impair our capital by being overweighted to any particular liquidity pool in the DeFi marketplace. So that's 2. 3 is technology. So every time Liquid Meta is operating within DeFi, we're using our own secure cloud-based server, which was built predominantly and only for the users of Liquid Meta. So always operating in a secure environment. And number 2, we incorporate technologies such as Fireblocks, which is our multi-sig wallet solution to deploy capital across DeFi. So we always have a checks and balances process for every single dollar that is deployed into DeFi as liquidity. So those are the things that Liquid Meta is constantly doing and constantly thinking about in order to reduce risk.
On that note, John, I feel like we covered a lot in this video, so I definitely appreciate all of these insights and just being transparent. This is great. Really appreciate your time today.
My pleasure. Thanks for having us.
Always a pleasure. And on that note, folks, if you have any questions, just let us know what you think, as we'll compile some investor related questions and maybe do a Q&A down the road, because this is a fascinating new sector that these guys are on the forefront of. So on that note, stay cool, stay awesome, and I look forward to catching you in the next one.